And every day it's causing more concern as the Dow continues to dip a little bit. We need to keep track of it.
It's like 12.5 or something. Anyway, this morning.
Is that what it is? You're right.
That's okay.
See, this is why I don't do math.
It's really weird.
Math is hard.
Yeah.
I need a different. Anyway.
Yeah.
This morning we're going to help you break down exactly what is going on, because it can be very, very concerning and very confusing. So our financial expert Brad Huffman is here this morning.
Yep.
Thank you for being here. Getting away from the phone, probably.
Exactly. Yeah, it's nice and calm in here. I like this. So, but yeah, not too bad for me anyway. We've kind of been leading into this for a while with many of our clients. We raised some cash earlier this year, so you're never quite ready when something like this happens. And I must admit, when I see down 600 points on the Dow, your heart starts beating a little bit faster. But I think we can kind of point at a few things. And I think when you can get some evidence behind you, you can feel a little bit better about what's to come next. And I think the big story is China. I mean, this is kind of a big deal. Yeah. This has been happening for a while. Those financial nerds, and we've been kind of looking at this stuff for a while. But it really accelerated late last week. There was a key index out of China that was a 6.5-year low. Media got a hold of it, gets scary, and then all of a sudden the market starts dropping. And when you start seeing moves of 300, 400, 500 points, it becomes a kind of self-fulfilling prophecy. So we had the decline last week, a big decline yesterday, although today's probably going to be positive if I were a betting man. But China is having an issue. They're the second largest economy in the world behind the U.S., so it does get attention. The difference is they're really taking extraordinary efforts to support their government, so their economy rather, and their stock market. So the government's really putting a lot of money into it. So they're probably going to keep things under wraps, but they still got a lot of work to go over the next several months.
Is part of this the issue that it's so government involved that it's not as open as the markets here, and so there's a lot shielded? You don't know what's going on.
I would say absolutely. And I would say let's look at what's happened here in the U.S. over the past 6 years. We've had a great stock market run. If you lost money in 08, but you hung out, you've made money well beyond what you lost. A lot of that is because of government intervention. We've had extraordinarily low interest rates now for 6 years. Never in our history have we ever had rates this low for this long. So that's been a major support. And I think one of the reasons why we are seeing some of this volatility now is that support might start to be chipping away. As of next month, there was a talk of the Fed raising interest rates. And I believe what we've seen up to this point, we've seen the market kind of churning around. This has not been a great stock market year. We had the China story on top of the uncertainty of interest rates, and all of a sudden you have a recipe for this fear in the stock market. So absolutely, it's been artificially influenced.
So your advice for people who are quivering today?
I would say depends on where you're at. If you're somebody who is retired and you're living off your investment assets, I hope by now you already have cash to work with. You really don't want to be forced to sell when the market's down 600 points in a day. So that group, I think it makes sense to be more conservative. And that's mainly the people that I work with. We've got cash ready. We can meet their needs for a while. We're in pretty good shape. If you're 22, 32, even 42, I'm really not worried about this. I don't believe this is the big move. The market's been so calm for so long, we've kind of been lulled to sleep. So when the market drops 10%, it should do that every year. Hasn't done it in 4 years.
Okay.
So this is a bit unusual. So this is, in my view, the research I'm seeing is this isn't the big one. This isn't the 30, 40, 50% type of decline we saw in 2008.
Right.
But this is something that will get your attention. And actually, it's a good idea to have some of that dry powder on hand. So world's not coming to an end, but pay attention to what's happening.
But somebody who saw their 401k take a serious drop yesterday, your advice is don't panic.
I would say no. We're seeing some of our long-term indicators that have my attention. So the next few weeks will be absolutely crucial. If we cannot see support hold, then this could lead to a 20% decline or more. We haven't seen that happen yet. Right now it's just pure panic. But again, if you're 20, 30, 40, that's almost irrelevant. The people I worry about are the people that need that money in the next 5 years, in the next year, or need it today. Those are the people that I think it makes sense to say, hey, we've had a great run. Let's pull back a little bit and maybe look at asset classes that aren't directly tied to the stock market so that you're not hooked up with every move in the Dow or the S&P.
We're out of time, but are you buying?
Not yet, but I will in probably the next few weeks.
Next few weeks.
Yep.
Brad, we appreciate it.
Always a pleasure.
Thank you so much. Coming up next, Cameron.
Can you loan me a little money next few weeks?
We got to find it first. Cameron's out on campus this morning.
He is. He's helping first-day freshmen like my Sydney Lou find their way around OSU.
Plus, we're going to check in live with Shannon. She's working on her hour-long Pinterest